Hey everyone, welcome to today's video. We're going to talk about Nio and my updated Q4 earnings prediction. Sadly, I think there's a lot of bad signs now again that I have to be honest and talk with you. I've updated my charts and my numbers, and we will go through them one by one. And the long story short, if you don't want to watch the whole video, is that to me, unless I haven't missed something, so please engage in the video and comment in the comment section. But if I haven't missed anything big, I think the we are again in the spiral of the net loss increasing. You could argue potentially that it has to be due to the ramp up of Onvo. That would be reasonable. Obviously, it's gonna be quite costly to ramp up a new model, especially in the beginning as the volume is low. But let's see, let's go through the numbers and see what you guys think. Before we go and look into the numbers, let's have a quick look of my estimations of deliveries, which is the main important part of that I based on my numbers on. So we can see that Onvo delivered, or they are on path to deliver around 5 to 5,500 cars for November, and this is according to my assumption that for the last week of November, so essentially this last 4 or 5 working days that we've seen, they will be able to deliver 1650 Onvo cars, which would be around 350 units increase compared to the previous week. To be honest, that's a fairly good number. Look at it. If you see that we started the month around, let's say, 1300 to 800, so let's say meet in the middle at around 1000 Onvo weekly average, and by end of the month we are at, let's say, 16 to 1700 weekly average. So that's a 60 to 70% increase. If my numbers are to be trusted for up and coming numbers that gonna be registered on Tuesday. But I think even if they came at 1500, it would still be fairly good, because then you would have a 50% increase in terms of deliveries on just 1 month. That's really good actually. And then looking totally at the numbers, I think that Nio in total would be able to deliver 24,320 or so cars, and without the last week we are around 17,500. My assumption is that we would be at 6,800 totally for Onvo and Nio in this up and coming last week. Then we go for December, and I think Onvo will be able to deliver 8,500, and I'm hopeful that Nio will deliver 20,000 for a combined 28,500 combined cars, which would by far be the best month they ever had, and it's one step in the right direction. Now, are they gonna be able to take 8,500 deliveries? I'm not sure. Remember that they said that the goal for December was 10,000, right? So I said to myself, what about we go a little bit lower than their own estimations? Over the past 2 or 3 years, they've been most of the time a little bit optimistic. So let's go with 8,500 to have some kind of margin to the upper limit. You can see there, some of the Onvo higher ups are kind of betting with people online about how many deliveries they're gonna make. They are for sure very confident that they will be able to deliver 10,000 cars. So that's their goal. I hope they are right, but I just for the sake of being at least somewhat conservative, because still if you go from 5,000 or so in November to 8,000 and a half in December, that's actually really strong, because that would imply that they will again increase their weekly delivery output for Onvo from, let's say, 15 to 1600 by end of this month to closer to 2000 to 2100 by end of next month. That's still a really strong monthly increase. So now with that, let's go to the actual real Q4 earning numbers. They said on the last earnings couple of weeks ago that the goal was to have a 2.8 to 2.9 billion US dollar in revenue. So this is this column here is the just reported Q3. This middle column is the new one, updated Q4 estimations, and this one was the previous Q4 estimations that I had for 3 or 4 months ago. Now you can see that I revised the revenue down quite a bit. I think my goal is that Nio will deliver around 73 to let's say 73,796 cars, which is 400 or so less than I expected before. This is due to the fact that they have set a target of 72,000 to 75,000, and this really depends on actually really depends on that they deliver quite a lot of cars in December. You can see that on my yearly like comparisons compared to in the green 2023, you can see that for the 2 last months of this year, the blue ones, they are 24 and 28,000 and a half. Remember that if you've been following this channel, you know that my numbers were much higher. I think they were like 26, 27,000 for November and around 30, even a little bit higher than 30 at some point for December. So I definitely lowered it down because I don't see us, I don't see Nio deliver 10,000 cars in this past week of November. So let's go, and if they would, then that would mean that if they hold that kind of pace, they would be at 80 to 85,000 cars for the Q4. And again, they said a couple of weeks ago, just a few days ago, that their goal for Q4 is between 72 to 75,000. And there's no way, they're gonna be so they're gonna miss their own guidance on the upside by this much of margin. So I think yeah, let's go with 24 for November, around 24, and around 28 to 29 for December. Now go back to numbers here. So we talk about the revenue being lower than we expected, and this is quite realistic, I would say. If Nio delivers, let's say 73,000 to 74,000 cars for the Q4, remember that of those, around 16 to 20,000 would be from Onvo, which is a much lower price. And now we go into one of the most important takeaways from my updated price. Previously, I knew that the average sales price in Q4 would be down because of ramping up the cheaper Onvo brand. But I think when I updated my number, I realized that the only way that these numbers are correct, 2.9 billion on the upper end, I had to decrease my average sales price well below Q3's average. So we are now at around 35,300 to 400 US dollar per sold car, due to the fact that, let's say, closer to 16 to 20,000 of 75,000 or so cars, let's say one fourth to one third of the cars are Onvo with much lower average sales price. So with that away, we can see that the easiest way to take the revenue is just take to the vehicle sales plus the other sales. And the vehicle sales, I went with, again, as I explained, the revenue, the average sales price times the number of cars delivered. And then as we go for the other sales, I think I was surprised on the upside in the previous quarter, and with that in mind, I will increase it quite substantially for this quarter, 20 million or so higher than I expected in my previous number. So this is a positive upside, and this leaves us with around 298 million. I could see myself be a little bit more bullish here. Actually, we could see 310, maybe in best case scenario 315, but I just went, let's be cautious. It doesn't necessarily mean that because the deliveries increase this quarter, it has to increase with the same pace in other sales. There could be a lag kind of effect as well. So this gives us, if you look at all of this, at 2.9 billion in revenue. Now we go to cost of sales. Now this is where sadly the pain starts, because we can see that if they increase their number of cars sold by around 19.3% compared to the previous quarter, which was 61,855, so there's a substantial 19 to 20% increase in volume. But that also means that there's going to be an increase in cost of vehicle sales and cost of other sales. Now, because Onvo is cheaper than Nio, I kind of went, let's go with a ratio of 20% increase in vehicle sales, but maybe 13% increase in cost of vehicle sales, because they are cheaper than the traditional Onvo. So that gives us this 2.3 or so, 2,337 million US dollar in cost of sales. And then cost of other sales, I went with just 20 million higher than the other sales, because I said, I showed you previously that the delta between those two are decreasing, which is good. We can see here, if we scroll to the metrics, you can see that the difference, so the last line here, the other sales minus cost of other sales was 24.7 in the previous quarter and was close to 30 in the Q2, and we are going in the right way, so maybe 5 million or so improvement every single quarter. So I would see us at 20 million or so delta. So we are close to profitability on the other sales, but that give us, cost of other sales of 318, which combines to 2655 billion US dollar in cost of other sales, and that leaves us sadly with a gross profit that is now decreasing. I was hoping for improvement, but you can see that if my numbers are correct, please comment in the comment section and let me know if I've missed something here. But to me it looks like this was a quick one. I didn't have too much time, so I will update it maybe in more detail later in the week or in a few weeks ahead. But you can see that on the first look at it, you can see that the gross profit should go down and the gross margin should be sadly go down to 8.62. Vehicle margin, although increasing a little bit, I think the additional cost of the insane build out of the swap stations. I saw just recently they built like 30 or so swap station in one day. Yeah, I don't agree with that, but that's the reality. And if you then look at the operating expenses, I think the R&D cost would be similar to Q3, but the SG&A would increase a little bit. Probably I'm a bit conservative here, but let's go with these numbers. Why I say I'm conservative? Because in the previous quarter it increased by 13%, and on this quarter I would say maybe a little bit more. We know that with the delivery numbers is up 20% almost, but let's say 610, and that leaves us with a loss from operation at around 800 million. You see here on this line here, let me zoom in a little bit. And then if you remove the interest income, expense and all the others, and then look at the net income and net loss, and the net income, or in this case net loss, would be 758. So we are again going up. Not good, not good at all. My goal was we would be at 550 at this point with a huge ramp up, but that's obviously not going to be the case. And this has implications because the burnout rate at this rate is much higher than I would have expected at this stage. And I think this is what you see in the stock price, to be honest. I think the smart investor, I think they already saw that immediately after the earnings, and they knew that this is not gonna be good for Nio. Like if they come up with anywhere close to this number 758, it really shows that they cannot control their cost. They are too bloated. They need to do something and do it now. You don't need to. I mean, what we've seen with Nio over the past 3 or 4 years is just they increase their sales, but there's absolutely no way for them to even improve. I'm not saying they should make profit. I'm just saying at least make steps towards profitability. Like every year they say, oh, next year we're gonna be profitable. First it was 2023, then it was 2024. Now apparently, according to Twitter, it's 2026. What do we know? Like by all means, like look at the again the lithium carbonate price. It's been going down quite a lot over the past 2 years. There should be much more headroom, but again they keep moving the goalpost, and this is the reality of the things. I still don't think that they're gonna have any like life-threatening or let's say survivability case for Nio. I think they will definitely be here for the longest of time, but honestly this road looks really difficult, and I think this is why the market actually sees the difference with Xpeng to a little bit at least, because they show much clearer path to profitability. So if you look at these numbers, a net loss of 758, even if I'm wrong, let's say I missed something, let's say the average sales price increases from like 35,000 or so to, I don't know, let's increase this number to 36, right? So we increase this from 35 to 36, and let's see how much that affects the model and the net loss. There you go. So the net loss goes to 684 if I increase the average sales price with 1,000 US dollar. But if I do that, that means the revenue would come in at 2,980 million, which is essentially 80 million above the upper end and 180 million above the lower end that they just themselves guided a couple of weeks ago, maybe 1 week ago. And we are already just 4 or 5 weeks remaining from the quarter, so the more than half of the quarter is already in. So unless they have a huge surprise in deliveries, I don't see them having this average sales price of 36. So if I decrease that back again to 35, that's that's what we get. 700 or so million, 750 million in net income, or in this case net loss. And I have to be honest with you, this is not good. But again, please comment in the comment section. Am I missing something? Is the average sales price unrealistic? Is maybe the I don't know, maybe they are lowballing on the revenue. Is it possible that they for once actually, gave a little bit conservative revenue and they beat it at 3 billion maybe? In that scenario, I think it would be, yeah, that's for sure, one scenario where the at least the margin doesn't take a hit. All we need, if they manage to, for example, get 3 billion instead of 2.9, that additional 100 million really improves the gross profit from like 250 to 350. Most of it goes to the gross profit because the I don't think the R&D or SG&A cost is gonna be affected that much. The problem is again, well, maybe I was a little bit too conservative on SG&A actually. You could say that, yeah. Let's say, okay, maybe this gross profit was a bit too optimistic, but maybe we would have 300 instead of 250. So in the middle of the road. And that would, obviously affect the gross margin at least to get close to 10.7 again. Whereas now it looks like, after I updated this model, I don't expect Neo to improve the gross margin next quarter. And I think it's more realistic that actually go back one step again. So it's the traditional Neo way of, 2 steps ahead and 3 or 4 steps back again. And that's the case, as long as they insist on building this battery swap station at this, I think, from my point of view, unrealistic pace or rate, this is what we're gonna get. So I wouldn't be surprised if the stock goes to, you know, at least it gets stuck at this stage until next earnings. Maybe we have a run up, but the moment, even if we go to $7 again, 6, 8, $7, what do you think is gonna happen when the next earnings come in? And they obviously show the case that, yeah, they're going racing up again in increasing the net loss. So that's the update for today. Please like and subscribe, and most importantly, comment in the comment section your point of view, and see you in the next one.